Why is it that the appraisals are so important in a real estate loan?
Because the lender is justifying his whole value on what the appraiser sees or what the trends are in the future. For example, if there's a freeway proposed 85 coming in next door or behind the house, and the appraiser goes out there and he's not aware of what's going on in the local community, it leaves the lender in a very difficult situation. 3-4 years from now, he comes out and the house is in foreclosure, and he says, well, nobody said about this, the earthquake fault area or the freeway right behind the house. And that's why we're the eyes and ears of the lender of Nelson.
Okay. What do appraisers do specifically?
Basically, appraising is determining the worth or an estimated value on the property.
Okay.
And what we do is we go out to the property, if it's proposed construction or land or a multifamily dwelling, and we'll determine by a number of income approaches or a cost approach or a sales comparison analysis, the most common method, where we'll go up to the house and we'll compare that house with other homes in the neighborhood. If it has a similar pool or if it has similar gross living area, if it's on acreage, and we'll determine value by location in that situation.
Okay. I know that there's sometimes that people have a hard time understanding the loan process, and I'm familiar with people that they don't understand if the appraisal came in too low, that it kind of might mess up their loan a little bit, or there's a lien on their property, or they're not getting the best interest rates that they think.
Right.
True. What's the big deal? I mean, why is there? It seems pretty complex, but very simple at the same time. Why is it that the investor is so very conscientious?
Yes.
Is that how you say
That's
that?
a good word.
That's a good word. What propels them to always look into all these different factors?
Well, Brian, one of the biggest problems in this industry right now is the issue of fraud. And let me share with you that the United States government has come down very hard on lenders. Now, I don't know if you're aware, or if our guests are aware of the fact that, last year alone, according to the National Association of Mortgage Brokers actually made half of the loans in the United States. Okay, so we provide a tremendous service to people. And what takes place is that there are mortgage people in this, in the mortgage industry that have bad reputations, for one reason or another. And the biggest problem is that they provide fraudulent documents. Now, sometimes the mortgage broker may not necessarily be part of that whole process. And so it's our duty to clean up the system. And what we do is we make sure that the documentation is accurate. And so what happens, for example, is that if someone calls me up and says that, I make $10,000 a month, they come in, take the application, I put that down, and then the documentation that's provided states that they only make $7,500 a month, but we have a little bit of a problem because there's such a large discrepancy in the amount of money that they actually stated they made. Now, on the other hand, when it comes to interest rates, there are different reasons why interest rates go up or down. And some of those, the mortgage broker or the banks or the savings and loan don't have anything to do with at all. It has to do with the stock market and credit markets, because money is purchased or bought and sold just like future contracts are. So what happens is that on any given day, depending on the volatility of the stock market, the bond market, how the dollar's doing in foreign markets, for example, the interest rate can either go up or down. So once again, then if someone has bad credit or has had a bankruptcy or has had some dings on, maybe somebody has made, that doesn't mean that they're not qualified for the loan, and it doesn't mean that the quality of their personhood or the quality of their character is such that they can't get a loan. It simply means that the way that we do the loan has to be different, and that the person who's ultimately going to buy the loan is in fact wanting a higher yield, and the loan is costing the mortgage broker or the mortgage bank more money. Now, to clarify something else, and that is that there are about 6 different ways you can finance a house. You can go to a bank, you can go to a savings and loan, you can go to a mortgage broker, you can go to a mortgage banker, you can go to a finance company, and you can finance it privately. And each and every one of those persons or institutions, for example, if a private person does more than 8 loans a year,
Right.
everyone has it has certain regulations they have to meet.
Okay. We're going to talk a little bit more about your brokerage in a moment. We're going to take a commercial break here real quick. And once again, we're talking about real estate loans here at What's Up in the 90s. And we're going to take a commercial break. But first, I want to thank California Mortgage, of which Nelson's a part of. And their phone number is 559-0100. Nelson, do you mind if they call you up?
No, I sure don't. I'd be happy to hear you.
Okay, we'll take a break. We'll be right back. Can you believe we're at?
Hi, I'm Anna. And I'm Alyssa, and we're here to tell you about some problems of the earth and how you can help. Today's problems are disposable diapers. The 18 billion disposable diapers we throw away each year create a double whammy. Most end up in clogged landfills, where they stick around for centuries, and their waste may pose a health hazard if the waste leaches into the groundwater. Anna, did you know that if we connected all the disposable diapers we use each year, they would stretch to the moon and back 7 times?
Really? Some better choices are cotton diapers.
Thank you.
A psychologist and a family member had me institutionalized while I was recovering from pneumonia. I was drugged, tied down, beaten, and threatened with electric shock treatments and a lobotomy.
If you or someone you know has been damaged by psychiatry, call the Citizens Commission on Human Rights, 1-800-869-CCHR. You can help stop psychiatric abuse. Call 1-800-869-CCHR. Call 1-800-869-CCHR today.
Hello, welcome back to What's Up in the 90s. I want to talk to our guests, get a personal feel for them, and find out a little bit about them and their companies. Let's plug your company and yourself, if you don't mind, Linda. Let's find out a little bit about you and American
Title.
Title Company.
Right.
Go ahead.
Well, personally, I started in the business about 29 years ago, last December.
I don't believe that.
I was only 2.
Okay.
But I started 29 years ago, and I have been in and out of it a couple times, and I've worked in about 4 different counties, you know, because that's the way Californians are. We move from one county to the next, you know.
Hopefully not forcibly.
No, right. No judgments, no liens. Right. No. I have been now at American Title. This is the second time I've worked for American Title.
Okay.
Now, I worked for them back in the early part of the 80s, and then I went to work for another title company, and then I have come back now. I've been here for only about 7 or 8 months, as a matter of fact. But I must have liked it because I have come back.
Well, welcome back.
Right, thank you.
And where's your office located, by the way?
I'm in Campbell, right across from the prune yard.
Okay, great.
Right on Campbell Avenue.
Local. Okay,
Yes,
great. And Jim, about yourself, your little background. I know you've got 2 degrees, and I'd like to hear about that, and then something about TRW.
I came out here originally from Minnesota, and you can tell the accent here. And started as a driver, actually, in with the Lomas and Nettleton Company, and from there I went to become a trainee and a staff appraiser with First Alliance Mortgage, and then I was fortunate enough to come aboard with TRW. And with TRW, we're a national company in appraising. We have it's called TRW Real Estate Loan Services. We're a multi-vendor product. With the multi-vendor product line, we have title, credit, appraisal, and loan docs. And we're one of the only national companies. We foresee that as the companies and the financial institutions continue to combine and come together in the 90s, that TRW we're years ahead of that. And I'm very excited to work with TRW.
Great. Well, you've got a couple degrees, and I'd like to know about that.
I have a degree in economics and one in a business administration. The reason I got a business administration degree and an economics degree was I originally wanted to be an oceanographer, but there's no oceans in Minnesota, and there wasn't really any money in psychology. So I decided that as I progressed through college that I might as well get a degree in business administration, and I figured I had enough credits to get another degree in economics.
So might as well, what the heck. Got some spare time.
Sure.
So, Nelson, a little bit about yourself and California Mortgage.
Well, let's see. myself, I was, I'm Hispanic, born in Puerto Rico, came to the United States, was educated here in the United States and in Europe. Have a degree in psychology and theology, double majored, and got into the loan business after losing a tremendous amount of money in high tech. And so I vowed to myself that I would never be not next to money, ever again. So I like what I do. I mean, it's a get-to for me. I don't have to do this job. I love to do it because I help other people's dreams really come true. And it's a tremendous opportunity, especially with California Mortgage. Steve Cornaglia, the guy that owns the company, has been very good to me, and he's really good to the agents there. And he gives us a tremendous amount of freedom. And I've worked for a big bank. I've worked for other mortgage companies. And Steve is, he just gives us a tremendous amount of freedom to do whatever it is that we choose to do. For example, if we want to specialize in a particular area, we can do that. And, certain areas of specialization for me are construction and B-paper, which I do quite a bit of. And I do a lot of luxury homes in Los Altos. As a matter of fact, that's where I met Linda, because I do a lot of financing in Los Altos and Los Altos Hills.
Great. Let me know if you find any good deals out that way. No down
We're not going to tell you till we've already bought it.
I got a deal for you.
Talk to you afterwards.
Sure.
One thing is, it's kind of, there's a lot of relationships that are built in the real estate industry. We don't have a realtor with us today, but I'm sure if they were here, they'd fit right in with you guys, because I think everybody kind of operates together. And it's just curious, I'm curious, who needs who more? Is it that
we all need Nelson?
That's right.
Is that right?
Me too. That's right.
I'll say something. Well, I would say that the most important process, not important, I don't know, it is really kind of a balance. I mean, they don't get work unless we get phone calls or I go out and see realtors, etc. But I will tell you, like, for example, TRW, they are a national company. I mean, they're like right on the spot, and it's so great when, in fact, the appraisal comes in at the right price, right? And the title people do what they do, because I don't do that. And they give us information about the property, and so that the transaction can indeed move forward. And without them, I can't do my job. I don't get paid for my efforts. I'm on commission, and most people that work in this business are on commission, like on the real estate side anyway, which includes the realtor and the lender. They get paid probably a little differently than we do, but I mean, I'm not like a doctor, like, oh, by the way, you have a terminal illness, I really tried real hard, but your estate's going to pick up that tab, right? That's not the way it is. I get paid for results.
Okay. And one thing too is I know that you probably get called upon from different title companies and appraisers, and there's a lot of early morning donuts coming your way, or something like that for your meetings or something.
There's a lot of competition. But I think that, maybe one of the things we ought to touch on is some of the things that are probably really misunderstood. And James could probably kind of touch on one thing, and that is the misunderstanding concerning the value of the property. Like, sometimes I'll get an appraisal back and the person goes, what? My house is only worth $324,000? I know it's worth, $450. The house down the street sold, for this, and the guy across the street did this. And, they're really reporting on the market.
Yeah, I was talking to you about that earlier, Jim, and how do you deal with that? Sometimes you probably don't feel you don't have people calling you up and say, hey, how come this appraisal came in there? I'm sure your relationship with Nelson would probably be something you have to disclose it to him. Is that correct? Or
that's right. What happens is when somebody calls in, and oftentimes they feel that their car in their house is the best house and the best car in the whole world, and you go out to the property and somebody has a elephant-shaped spa in the backyard, and they got these mirrored ceiling in the family room, or wherever, and you go, well, not everybody's going to be like that amenity.
Elephant-shaped spa.
Right. I mean, what can you do? You go out there and you don't want your, if you have a 2-year-old child, which I do, you're worried about them falling in, and what happens? You don't like elephants. I mean, those types of amenities, people don't seem to realize that not everybody likes that type of amenity. So what we're looking at is to see what maybe 9 out of 10, taking from the dentist 4 out of 5, people are going to look at, and then compare similar homes to similar homes in similar locations. And in the end, we come up with a value that is fairly consistent.
Okay. I'm going to open this up to any of you that wants to talk about that. I'm sure you all, in dealing with a client, you all have common problems that always come up. And what are some common problems, Linda, if you don't mind helping us with this, what are some common problems that we have that are a little tough for your clients to understand?
Usually it's like, whether it be a loan or a sale or a purchase or any of that, they are separated from someone. They are not divorced. But they think that that means, you know, we're not living together and we're getting a divorce, but they don't understand why they have to get the quitclaim deed from the present. It is still a present husband, wife, or wife. And they just don't understand that because they're getting a divorce.
They're on title.
Yeah, they're actually, in the case of where it's a sale or in the case where it's a loan, they're still entitled, you know. And the fact is they're not an unmarried person. We do have to get rid of that interest of that party. Also, somebody has a piece of property and they purchased it as unmarried, okay? Now they're going to be selling it or they're going to be putting a loan on it, right? They have now married, okay? They don't understand that just because they have a prenuptial agreement, that doesn't come into title. That's something that has to be taken care of by the law. We cannot presume that it's taken care of by that, that no, this other spouse doesn't have an interest. They do. This is a community property state.
Okay.
And they get upset with us because they think we're telling them what to do. We're not.
You can take it, though, can't you?
Yeah, I have big shoulders. Right.
Jim, what are some common problems that you run into with clients? Are there?
I think two things is you have a lot of what Nelson was calling it was denial and maybe a little, the expectations aren't always there. People, they don't want to talk about, well, you know, like they're getting married or they're unmarried, and they don't want to talk about the income. Well, I'm going to make more money, and they don't want to disclose how many properties they have. And maybe when you come up to the property, you see, you know, the weeds are all in the front yard, and you walk into the home, and you know that they haven't cleaned their house that well, and people will say, well, you know, there's a few problems there, and there might be holes in the walls, and people don't want to talk about those things. They want you to just go out and see the property and just kind of have you, or they don't want you to mention about that room addition or the permits regarding something. So people don't really want to know the full disclosure sometimes on things. And as by law, we need to be straightforward and let Nelson know exactly what's going on.
The condition of the property.
Okay.
I think, go ahead.
I was just going to go ahead. We're running out of time here, but I want to make sure I get to each and every one of you as far as what you think we can expect in the 90s with regards to real estate loans and your particular field. Jim, why don't we start with you?
I think three things. We'll see the consolidation of financial institutions. We're going to have more of the major lenders, the insurance companies will have more of an impact in financial lending. Also, we're going to see a lot more legislation. The reason being with the Barnhart Committee and with a lot of the defunct savings and loans, people are saying, who's accountable for this? And also, we're going to see a lot more companies like TRW who have a vision for more than one product that can come in and market the whole backside of the loan package.
Great. Linda?
Well, we've seen in California, as far as I can remember, in about 1963 or so, there was a small recession. And in 1973, another one that only lasted about a year. And then in 80, the first part of the 80s, we had one that lasted quite a while. And I think we have all learned that that can't happen anymore. It's not going to happen. Okay. And so maybe business is a little bit slower now, but we just have to work harder. We have to help each other more, that's all.
Okay. Nelson?
I think that one of the things that we're going to be able to see, or we're starting to see it now, is the computerization of the loan process more and more. I believe that probably by the mid-90s, we're going to see loan officers just carrying around laptop computers and qualifying people right in their home. And the loan process, they'll probably get loan approval within within that day.
So computerization is going to speed up things a little bit.
Very big deal.
Okay. I want to thank our guests, Nelson and Linda and Jim, and thank you very much for coming on the show. You're very interesting, and hope to see you again sometime down the road.
Well, thanks for having us.
You're welcome. Thanks for joining us here at What's Up in the 90s, and please join us next week for another exciting show. Good night.
This has been What's Up in the 90s with your host, Brian Stuckey. Be sure to join us again next week for another look at What's Up in the 90s. I'm Tim Jeffries. Good night.